What if splitting a payment into installments didn't just help shoppers, but reshaped the future of European retail and travel entirely? Buy now, pay later, or Bnpl, is no longer a fringe payment option. It's rapidly becoming a core engine of consumer spending, with Europe's market projected to surge toward nearly $300 billion by 2030. But this growth isn't happening in a vacuum. It's riding on trends like omnichannel retailing, sustainability financing, travel recovery from the pandemic, and even AI-driven credit risk tools. In this video, we'll unpack how Europe's Bnpl market is evolving, who the key players are, and what this means for shoppers, merchants, and financial systems alike. What is Bnpl and why Europe? Buy now, pay later is a flexible payment option that lets consumers break purchases into installments, often interest-free, instead of paying all at once. In Europe, this concept has grown explosively in recent years. Between 2021 and 2024, the market achieved a compound annual growth rate of about 20.6%, a sign of strong consumer adoption and merchant integration. For 2025 alone, the European Bnpl market is expected to hit around $191.3 billion, with forecasts showing continued growth through 2030 at a CAGR of around 9%, potentially reaching nearly $293.7 billion by the end of the decade. This boom is powered by factors unique to Europe: high e-commerce penetration, strong digital payment infrastructure, growing demand for flexible credit, and changing spending habits in a post-pandemic world. E-commerce as the Bnpl launchpad. E-commerce has been the natural launchpad for buy now, pay later from the very beginning. Long before Bnpl reached physical stores, online shopping environments provided the perfect testing ground: high transaction volume, real-time data, and consumers already comfortable with digital payments. In European markets such as Germany, Sweden, and the United Kingdom, Bnpl adoption accelerated rapidly through major online retail platforms. Companies like Zalando and Otto didn't just add installment payments as an extra feature. They embedded Bnpl directly into the checkout experience, positioning it as a seamless default option rather than an alternative form of credit. The impact was immediate and measurable. Retailers saw higher conversion rates, larger average order values, and, most importantly, a noticeable reduction in cart abandonment, one of the most persistent problems in e-commerce. When shoppers reach the checkout and see the total price up front, hesitation often kicks in. Bnpl softens that psychological barrier by reframing cost into manageable installments, making purchases feel more accessible without requiring traditional credit applications. But Bnpl's role in e-commerce goes beyond simple convenience. It fundamentally changes how consumers perceive affordability. Instead of asking, "Can I afford this right now?" shoppers begin to ask, "Can I afford this per month?" That shift in mindset has been a powerful driver of growth, especially during periods of inflation and economic uncertainty across Europe. However, Bnpl's influence doesn't stop at online checkouts. As consumer behavior evolved, retailers recognized that customers no longer move through a single linear buying journey. Shoppers browse online, compare prices on mobile devices, visit physical stores to see products in person, and often complete purchases across multiple channels. This is where omnichannel strategies become critical. Bnpl providers and retailers have increasingly integrated installment payments across both digital and physical environments. Today, a customer can begin a Bnpl plan online and finalize the transaction in-store, or try a product in person and later complete the purchase online using the same payment option. This cross-channel continuity removes friction from the buying experience. It allows customers to move fluidly between platforms without resetting their payment preferences or reapplying for credit. For retailers, it means maintaining engagement throughout the entire customer journey, rather than losing sales at the point of transition. In an increasingly competitive retail landscape, this flexibility has become a key differentiator. Brands that offer consistent Bnpl options across channels are better positioned to build trust, encourage repeat purchases, and strengthen long-term customer loyalty. Rather than functioning as a short-term sales tactic, Bnpl, when embedded thoughtfully, becomes part of a broader customer experience strategy. And as European consumers continue to expect seamless, flexible payment options wherever they shop, e-commerce will remain the foundation on which BNPL innovation continues to expand. Travel and post-pandemic dynamics. One of the more surprising growth areas for BNPL in Europe is the travel industry. As leisure and business travel recovered after the pandemic slowdown, airlines, travel agencies, and booking platforms began offering installment payments as a way to attract early bookings and manage rising travel costs. Flexible payment plans make travel more accessible, spreading out the cost of flights, hotels, and vacation packages without upfront pressure. For many consumers, this option makes aspirational travel feel possible again. This trend is expected to deepen as travel fully normalizes and customers look for ways to manage expenses in an inflationary environment. Sustainability and green financing. Another fascinating aspect of BNPL's growth in Europe is its link to sustainability. In environmentally conscious markets, especially Germany, the Netherlands, and Nordic countries, BNPL providers are experimenting with financing options tied to green products, solar panels, electric vehicle chargers, energy-efficient home upgrades, and sustainability-focused purchases. These green BNPL offerings not only appeal to consumer values, but also help spread the cost of eco-friendly investments, making them more affordable for middle-income households. Government incentives and strong climate policies in parts of Europe further bolster this trend. Omni-channel retailing and customer experience. The modern consumer doesn't separate online and offline shopping. They research online, compare prices, and then make in-store purchases, or the reverse. To match this behavior, BNPL has shifted from being just an online checkout feature to a seamless omni-channel tool that enhances the purchasing experience across touchpoints. Major retailers like MediaMarkt and Decathlon are offering BNPL at both online and physical checkouts, especially for big-ticket items like electronics or fitness gear, a move that increases convenience and reduces friction for buyers. For brands, offering BNPL omnichannel isn't just about convenience, it's about capturing the full customer journey and converting interest into sales. Technology and risk management. As the industry matures, technology is a key competitive advantage. Providers are leveraging AI and advanced data analytics to improve credit risk assessment, tailoring credit limits, repayment plans, and default prediction models with greater precision. Tools like machine learning help BNPL firms identify high-risk borrowers earlier, reduce defaults, and personalize services, vital in a landscape where responsible lending practices and compliance are increasingly under scrutiny. However, this technological edge must balance with data privacy protections such as GDPR, adding complexity to equisatu deployment in credit decisions. Regulatory landscape and consumer protection regulation is tightening across Europe as authorities aim to prevent over-indebtedness and ensure transparent lending. Countries like the Netherlands are even proposing limits on BNPL usage at physical stores to curb impulse spending, while Germany has implemented stricter credit checks, and France now requires comprehensive fee disclosures. Across the region, policymakers and advocacy groups are pushing for clear affordability checks, transparency in terms, and stronger consumer protections, creating both challenges and stability for providers. As regulation evolves, larger players like Klarna and Riverty may have an advantage because they can absorb compliance costs more easily, potentially leading to market consolidation as smaller firms seek mergers to stay competitive. BNPL's role in Europe's financial future. Europe's buy now, pay later market is no longer a niche trend. It's a rapidly expanding ecosystem, touching retail, travel, sustainability, and omni-channel commerce. From 191,3 billion projected in 2025 to nearly $293.7 billion by 2030, BNPL is redefining how consumers pay, how retailers sell, and how financial services innovate. But with growth comes responsibility. From regulatory compliance to consumer protection, innovation must stay balanced. Whether you're a consumer, a retailer, or simply curious about the future of payments, understanding Europe's BNPL evolution offers insight into how flexibility and technology are shaping the economy itself.